Beyond Markets presents a verified global finance update. According to reported energy outlooks, oil remains important heading into 2026. This update is based only on official reports and major news agencies. Sources include Reuters, Bloomberg, CNBC, BBC, and government data. Despite renewable growth, oil demand remains strong, according to reports. The International Energy Agency states oil still supports global transport. Manufacturing and global trade continue to rely on oil. This directly impacts oil-producing countries. Oil revenues support government budgets and public spending. Historically, exporters benefit when demand stays stable. Saudi Arabia is one of the world's largest oil producers. Reuters reports oil is central to Saudi government revenue. Saudi Aramco remains among the most profitable energy companies. Low production costs strengthen Saudi oil earnings. Official statements confirm oil funds' national development. The United States is also a top global oil producer. The U.S. Energy Information Administration tracks strong output. CNBC reports the U.S. exports large volumes of crude oil. Oil production supports jobs and trade balance. Energy output strengthens U.S. energy security. The United Arab Emirates remains a major oil exporter. Bloomberg reports oil funds' key state investments. The UAE uses oil revenue for economic diversification. Official data shows oil supports sovereign wealth funds. Russia is one of the world's largest oil exporters. Reuters reports oil remains a major revenue source. Despite sanctions, exports continue to global markets. Energy sales support government spending, according to reports. Canada holds one of the largest oil reserves globally. Bloomberg reports oil sands drive long-term production. Energy exports contribute significantly to Canada's economy. Oil revenues influence national budgets. They help fund infrastructure and public services. They can support currency stability. Central banks closely monitor oil prices. Reuters reports oil prices affect inflation expectations. Higher revenue can strengthen public finances. However, oil markets remain volatile. Prices can rise or fall quickly. Global slowdowns can reduce demand. Energy transition policies add uncertainty. These risks appear in official outlooks. IEA reports oil demand continues through mid-decade. OPEC statements confirm ongoing global reliance. No source guarantees prices or profits. All outcomes depend on global conditions. Oil remains economically important for exporters. Saudi Arabia, the US, UAE, Russia, and Canada stand out. This is based strictly on reported data. This content is for informational purposes only. This is not financial advice. Beyond Markets delivers verified global finance news. No hype. No rumors, only reported facts. If you value factual financial reporting, hit like to support the channel. Subscribe for verified global market updates. Turn on notifications to stay informed. Thanks for watching Beyond Markets.